This week, the most crowded trade on Earth flinched. Alphabet dropped 6% in a day. Chipmakers slid together. And the question Wall Street spent 2 years ignoring got loud. What if the AI boom is spending trillions to earn billions? Is the AI trade cracking, or just catching its breath? The first crack is human. When the people building the future start leaving, the market notices. This month, 2 of the biggest names in AI research walked out of Google. One to OpenAI, one to Anthropic. In days, sentiment on Alphabet flipped from bullish to bearish. Stars don't leave a rocket ship. They leave when the easy gains are behind them. The second crack is financial. In 2026, the big cloud players are on track to spend over $450 billion building AI. Alphabet alone raised its budget to nearly $190 billion and sold $85 billion in stock to pay for it. Meanwhile, its free cash flow fell almost 50%. Amazon's dropped 95%. They are spending like the future is certain, while the cash they actually generate is shrinking. Here's the ratio that keeps analysts up at night. By one former regulator's math, the industry spent around $500 billion on AI this year, against maybe $50 billion in actual AI revenue. $10 out for $1 back. An MIT study found 95% of companies got zero measurable return on their AI spending. And consultancy Bain estimates AI will need $2 trillion of annual revenue by 2030 to justify today's build-out. More than every giant U.S. tech company earns combined. The bet isn't that AI is useful, it's that it becomes useful fast enough. And then there's the part that rhymes with history. Much of the money is circular. The biggest chipmaker invests billions into the biggest AI lab, which uses that money to buy its chips. A software giant owns a quarter of that lab and is a fifth of the chipmaker's sales. The same chipmaker backstops the debt of the cloud firm renting out its hardware. Money moving in a circle can look like demand, right up until someone needs real cash out the other end. But, and this matters, every build-out looks insane before it pays off. The internet was overbuilt too. The fiber laid in the dot-com mania ran the next 2 decades of the web. AI usage is genuinely exploding. Chips do sell out. Maybe the revenue is simply a few years behind the spending, and the people calling bubble will look as silly as the ones who said the internet was a fad. Boom, bubble, or build-out. Reasonable people disagree, and nobody actually knows which one this is. So watch the gap, not the hype. One number settles this over the next year. Does AI revenue start catching up to AI spending? If it does, this was a dip. If it doesn't, this week was the first crack. Either way, when an entire market depends on one thing staying true forever, that is exactly when you pay attention. If this helped it make sense, do me a favor. Drop a like, share it with someone who needs it, and subscribe. New market breakdown every week.